Hello, everyone, and a very warm welcome to this live session by PolicyBazaar.ae, where we will be talking about a subject that all of us need to be more aware of: insurance. Despite the benefits and the importance of term insurance, there are very few people who understand what it is and why they should invest in it. This has, of course, improved slightly after the COVID pandemic, after so many casualties that impacted the entire world. But there is still a need to increase awareness about the concept of term insurance. And that is why we are joined here today by Joseph Terence, who is the business head of life insurance at Policy Bazaar UAE. He's been working with the insurance industry for more than 15 years and has worked with different insurers across the globe during this period. Hi, Joseph. How are you? Thank you so much for joining us.
Thank you, Aditi. Pleasure. Talk to you again.
Same here, same here. Lovely to talk to you again. So, Joseph, why don't we begin this session by talking to the audience about what term life insurance is and what it is that they should know about it.
So I'll briefly talk about what term insurance is, like very short words. So this is a very simple kind of insurance that anybody can buy. It's a pure life insurance, which has primarily two little things to talk about, which is the simplicity of the policy itself, the benefits, and that it is of a finite duration, which is a finite period. And again, it is the cheapest form of insurance that you can have, life insurance, basically. Yeah, so that's the simplest way you can put what term insurance is.
Okay, so how is term insurance different from whole life insurance? Like, what is the difference between the two, and what is whole life insurance, if there is a difference at all?
Right. So as the name suggests, term insurance is for a finite period, which is a limited
Okay.
period. So you can say 10 years or 30 years. But whole of life, as the name suggests, is something that is for the whole life of that person. So companies give insurance up to 120 years age,
Oh,
basically,
okay.
right?
Hmm.
Basically, term insurance is a simplest way when you pay the premium and you get a coverage. Whereas in whole of insurance, there are two components. One basically is the insurance part where your money basically pays for the premium, and the second part is the investment part where it is either invested into any kind of funds which basically grows. So it also acquires some kind of cash value, right? So term
Okay.
insurance, no cash value for a limited period, whole of life for all your life, has two elements: benefit plus a cash value as well.
Okay. You said that there's like insurance companies give insurance up to 120 years, but that is not the general life cycle of adults, at least right now. People, the life expectancy is what, up to 70?
80, yeah, I can answer. There
80?
are people who have currently lived up to 100 years, so it means like nobody's going
Their
to.
countries. So then, what is the point of having a war period?
So there are differences again. Now it is need based again. Now for your short term needs, like if you have a mortgage, if you have some family commitments, like you want to keep your family's financial safe till your daughter is married, for a young child, or till your retirement, uh, basically till the time you're earning or you're retiring, then you look at term insurance, which is basically time only. Okay, I'm going to retire in 40 years. So you take a 40-year plan. But whole of
Okay.
life insurance is basically something that will cover you till your death. I mean, definitely till death, right? You're saying, okay, no matter what happens, I'm going to do estate planning for my kids. I need something which I can encash probably if I need a later in life. You look at whole of life insurance. That is two primary differences. Other than that, premium wise, both are level. Term insurance is very cheap. If you look at whole of life, your premiums would be probably about 15-20x of what term insurance is. Length of coverage, you can say it is for term insurance up to 40 years. Usually it's 30. Some companies give up to 40. Uh, For whole of life, it's your lifetime as the coverage period. Again, talking about cash values, term insurance do not have any kind of cash values, no surrender values. Whereas for whole of life, you have surrender values, you accumulate some kind of cash benefit. Again, are they guaranteed death benefit? Yes, both of them have guaranteed death benefit. Like if the policy is active and you die, there is a portion of the money that is given to the nominee or the beneficiary.
Okay. Okay. So which would you say is better? Like, is there one, is term insurance better than life insurance, or is whole life insurance better than term life insurance?
You can't say which is better. Now, every person has a different need. If my need is a short-term coverage, which or probably I'm thinking I only need to be get covered until I'm say 65 or 85, I can take a term plan which is limited, finite, right? You have certain goals. But if you're thinking of having it till end of your life, whole of life, two things. One is a permanent insurance. If you want a permanent insurance for the whole of life, pay that. If you have a low budget, if you don't want to pay too much for the insurance, take a term insurance. So the difference is only about what you basically need. It's not a policy. I mean, I can't say that term is best for everybody or whole of life is best for everybody.
Okay.
It is just based on your need.
Understood. Understood. Okay. One announcement to the audience. We will be taking questions at the end of this session, and this is your chance to interact live with an expert in life insurance and term life insurance. So if you have any questions, do leave them in the chat box on YouTube, and we'll relay them. Just going forward, I understand that it's need-based, right? So if, for instance, I have the capacity to invest 15x more and I also want the benefits of a whole life insurance, then it would be better off, like I would be better off investing in a whole life insurance plan.
Definitely. Now then you should.
Is there a scenario where you can also invest in both?
Sorry, I didn't hear that. If you can take both the policies.
Yeah.
Definitely, you can have term policies. So what we suggest usually is you should have a life coverage, right? So I mean, for the beneficiaries or anybody who's dependent on your income, you should have some kind of life coverage which will benefit them in case an unfortunate event happens and you die, right? So both of them actually have the same purpose. It only the difference is whether you want to pay more and acquire a cash value along with that and cover for whole life or for a shorter period. It's basically need again. Now, yes, to your question, can I take both insurance? Definitely, you can take both or any one.
Okay, understood. Okay. Okay, moving on to slightly more in-depth questions about term life insurance. What happens if I, for instance, outlive my term insurance policy? Let's say I've taken a 40-year term life insurance, right? And I don't die at the end of 40 years. What happens to my money? Do I get it back? Do I not get it back? Is there some benefit to it eventually?
On a lighter note, I should say, your family should be happy that you've outlived, and you should thank God that you have a long life. Yeah, apart from the jokes apart, no. Term life matures and you don't get anything. The basic term life.
Okay.
There are a couple of policies which has a return of premium element. Now, return of premium is that if you outlive, you get a certain amount of money or the premiums that you've paid back. Now, in level term or the return of premium, the premium is different. So if you have a level term plan, you won't get anything. But if you have like a return of premium policy, you would get at least the cash benefit or the premiums that you've paid. It comes back to you. But again, the premium difference is about 3x again. So you pay 3 to 4 times more than the level premium.
Joseph, could you touch upon the term return premium, because I don't think I understand that very well as somebody who doesn't have a background in insurance.
So if you say for a particular case, for a particular client who is taken 100,000 dirhams cover, the premium is 100 and annual 100, and he pays a premium for 10 years. So he pays in total 1,000 dirhams, right? If it's a pure term policy, at the end of 10th year, he's paid 1,000 dirhams. He doesn't get back anything. Now, when
Okay.
it comes to return of premium, the premium might be slightly more, say 300
Okay.
dirhams a year. He's paid in 10 years, which is 300 into 10. He's paid 3,000 dirhams. At the end of the policy year, which is 11th year, once he completes 10 year, if it's a 100% return of premium policy, he would get 3,000 dirhams back if nothing happens to him.
Oh, okay. Okay. Understood. Okay. So return on premium is basically a sort of term that you use for policies where you can get your premium back after the term insurance, if you've outlived the term insurance
So
policy,
either you
basically.
call it return of premium or
Understood.
generally you call it drop as well in the industry.
Okay. Okay. Understood. Okay. And what about other modifications, Joseph, like term life insurance policies? Do they have other modifications like the return on premium bit that we just talked about?
Yes. So in the UAE market, you primarily see three kind of policies, which is three or four you can say. One is a level term premium, which your premiums are flat or same across the premium payment term. The second one
Okay.
is the return of premium. Again, the premiums are flat. Third one is a decreasing term you call where the sum insured actually reduces during the tenure of the policy. So basically, at first year, if you have 100,000, second year it may be either it is proportionately or through an amortization table it reduces. So it may be 90,000 in the second year, but premiums are level. It is lesser than the level term premium. The third one that
Okay.
you see is a annually renewable term. Now, here,
Okay.
premium rates are not guaranteed, but the renewability is guaranteed. So I will renew the policy. You don't need another round of underwriting on that, but premiums will change based on age. So today you are 30, you pay X premium. Tomorrow you are 31, you probably pay X plus 1 or X plus 2X, whatever premium. Right? So it changes every year, but continuity is guaranteed. You don't need a fresh
So,
underwriting.
so in this one, like when your premium changes annually, does the coverage also change with the premium?
No, so the coverage remains same. It is age based now. This year I'm saying, okay, you have this premium. Next year you don't need to go through underwriting, but premiums will change based on your age. It's called annually renewable
What
policy.
what is underwriting?
Underwriting is where we ask the clients for their medical details, medical history, financial underwriting. At the same time, if we need to send them for physical underwriting, physical medical, we send them physical medical underwriting, and then based on what are the results of your medicals, it is Edwards or whatever. We either rate you up. Rate you up means probably do a loading based on if your health is not too good, adverse head condition. So it's a substandard case. Or if it is standard case, which is standard, you pay the same premium. So underwriting is basically assessing your health,
Oh,
medical
okay.
underwriting, or financially whether you are whether we can give you that coverage.
Okay. So, but then what is the benefit of the last two policies that we talked about? Because if the coverage remains the same and you have to pay more premium as you grow older, isn't it better to just take a term insurance policy where you're paying a flat rate across?
So the most prevalent or most sold is a level term policy. Your reducing
Hmm.
term where your sum cover decreases is usually tagged to a mortgage, right? You've taken a bank mortgage, you're paying off part of the loan,
Okay.
and the amount is reducing, so you just want to cover that amount. So you take
Okay.
a level term is somebody who wants to take it based on age. Again, here the rates are slightly cheaper in initial years, and it grows. It becomes expensive as you grow old.
Okay. Understood. Understood. Okay. Um, so for term life policies, as well as for whole life policies, how long do you have to continue paying the premium? Is it for the entire duration of the policy, or is it like a set period of time and after that you don't have to pay the premium anymore?
That's a good question. I keep getting those questions. So there are companies which offer a limited pay option, which says that, okay, for term insurance, if you want a 40-year coverage, you pay for 10 years or 5 years. You can pay that. Similarly, on whole of life also, you have the same option. You pay for 5 years, 10 years, 15 years. Uh,
Okay.
uh, you can, I mean, it's both ways actually. You have both the options. You can either keep paying throughout the policy term or you have a shorter period. It depends on company to company what they offer.
So the pricing must differ, right? Like when you're paying for a shorter period of time, let's say you're paying just for 10 years or for 5 years, you're paying a higher premium, I'm assuming,
That's right.
than if you were to pay it throughout the entire
Yes. So
duration of
in
the policy.
40 years premium in say one go or probably in 10 years, there would be a slight discount that is given because
Oh,
you're
okay.
paying as lump sum or upfront.
Okay.
But yeah, again, you'll have to pay a higher premium considerably because you're paying 10 or 30 years worth of premium in one shot.
In one shot.
One shot,
Okay,
one
understood.
smaller period.
Yeah, understood. Okay, Joseph, I understand the premium aspect of it. Like I have more clarity on that. What I now want to understand from you is um, what is not covered by an insurance policy. So we know that death benefits are covered. We know that we can get modifications and cover nominees.
Normally.
What are the things that are not covered in a life insurance policy?
So I can put it in two ways. So I'll explain what are the exclusions usually attached to a term insurance or a life insurance policy, right? Uh, because of the current situation, I think it is more important to tell you that global situation, what is happening all over the world. Traveling to a country or an area where war or war-like situation has prevailed, and there are guidelines either from the Commonwealth Office uh, that says you should not travel there, right?
Okay.
Uh, then that place is not covered. Any death happening in that cover is not covered. Uh, and if there's sometimes if you are in a country and the state say that there is going to be a situation or there is a situation, you need to move out of this place in within 28 days or a time period. Anything happening there will
Okay.
be covered. That is one. Second is where you willfully participate into any kind of illegal or prohibited act or violation of any law or even attempted
Okay.
violation of any law and such kind of things, you will not be covered. Right. Third would
Okay.
be active participation in terrorism acts, similar things.
Hmm.
You're actively participating in warlike operations or war. Uh, anything happening due to what do you call a nuclear or biological or a chemical explosion. Sometimes that is an exclusion.
Understood.
If
Okay.
you commit suicide or any kind of attempt to suicide, whether you're sane or insane, that again is not usually covered. Some companies cover it after first year and some after 2 years the policy has been in force. Again, now the third most important thing is any claim that arises out of misrepresentation or non-disclosure of facts. It can be health or
Hmm.
anything, right? So
Okay. Okay.
a pre-existing condition or you have a medical condition which you know of and you're not declaring, uh,
Hmm.
that's basically an exclusion that all the claims can get rejected. So I think I would have cleared your question, or I've probably answered what you want. Or
Yeah, definitely. Just one more doubt that I have in this is you said like war or warlike situations, or if anybody is participating in war-related activities. So does that mean that soldiers or maybe police officers are not liable to get insurance?
yes, so any personal in armed forces, people who are flying commercial aircrafts are not covered, at least during
Okay.
the time they are doing it. So probably a pilot would need an aviation questionnaire, and the underwriters would look at it and see whether they want to cover them or not. But again, some people say that, okay, we will not cover you while you're flying as a commercial pilot, or you're flying a
Okay.
plane, uh, and anything related to an incident that happened when you were flying a plane. Same goes with
Okay.
who is in the armed forces as well.
Okay. So basically, like if somebody
Sorry, Aditya, I think. Sorry, Aditya, I think I lost you. So I'll just explain it again till Aditya is back. It's basically you can probably apply and state it in your policy wording or in the application that we need this kind of particular coverage, and we are part of these kind of things. Like I'm in the armed forces, which can be army, navy, police, coast guard, or anything, and or I am a pilot, right? So yeah, that will be covered during that time when you are not actually there, or you're not participating in that your profession. All right. So since Aditi is not here, I can also talk about what are the riders that can be attached to your policy, right? For whole of life plan, or whether it is a term plan, there are common riders that can be taken along with the basic death benefit. So basic death benefit is the sum insured that you take for uh, so basically that is which is covered against death only. Now with that, you can take benefits like permanent total disability, which means in case due to an accident or sickness, you are permanently disabled and you are not in a position to work or earn a living by a profession or any profession, a claim would be paid out. That can be an accelerated benefit, which means it will be reduced from your death benefit, or it can also be an additional benefit. So additional means it will be above your death benefit. So you have a permanent total disability, and you are paid out as a lump sum for permanent total disability. Now, after that, a couple of years down the line, you unfortunately die. A lump sum of the death benefit is also paid back to your beneficiary. Now, the second rider that people ask for and usually take with these policies is a critical illness rider. Now, critical illness means anything that so again, critical illness is an accelerated and an additional benefit. There are certain limitations on how much cover or for what period we can give you that cover, right? So critical illness basically covers major critical illness like heart attack, cancer, and so many other illnesses. Some companies give 6 critical illnesses, and some give up to 30 to 40 illnesses. So it depends on what actually you want. Uh, Another rider that you can attach to your policy is accidental death benefit, which can be a double indemnity kind of a thing. Double indemnity means where you, in case you meet with an accident, accidental death benefit is paid. At the same time, even the death benefit is paid. So if you've taken a 1 million of accidental death and a 1 million of death cover, in case of an accident, both of them is paid. So 2 million is paid out. Now, there is a built-in cover that some insurance policies give, which is called a terminal illness rider. It is also a rider again. Now, terminal illness is something which, if a doctor or two doctors certify that you are not going to survive beyond 12 months, then an accelerated payout is made. Probably about 50% of the sum cover is paid lump sum beforehand, and after after that, when the person dies, the remaining amount is paid out. So these are the 3 or 4 main riders that people ask for and are available with both term and whole of life plans.
Thanks for that, Joseph. Um,
Right. So
yes. Yeah, sorry. What were you saying?
so we were speaking about the riders, Aditi, and as I
Yeah.
explained them that all the 4 riders can be taken, but again, it is again an additional payment that you will have to pay above the normal basic premium that you have for these riders. Now, all these riders do not cover you till end of the age. It has limitations. Some riders expire at 60 years, 65 years, 80 years, 85 years. Again, that is also dependent on each insurance company, till what age limit they want to give the coverage for.
Okay, okay. So, is there a thing that the earlier you start, the longer the duration of the riders can be, or is that not a case? Like age has no bar in this, so it starts only whenever you take it, and it will be till a particular age itself.
Yes, so usually riders, additional riders expire at a certain age. So for example, if you've taken a term insurance policy or a whole of life insurance policy at age 50,
Hmm.
and the critical illness rider you've attached to that policy, but so you've taken a 40-year term policy, for example. Now, since you've taken it age 50, your coverage for death would be up to 90, but the
Okay.
critical illness at rider will expire at age 60. So no matter when you take at a particular age, that will expire.
Okay. Okay. So one question that I just have is, let's say the later you take a term insurance policy or a whole life insurance policy, like let's say somebody takes it at 50, right? Can they still take it for 40 years, or
Uh,
will they have to take it for a lesser duration?
so there are 2 things that they look at. So whole of life policy doesn't have a problem because it is covered for whole of life. You can take it at any age. But when you take term policy, okay, entry age is a problem. Now, entry age, some policies you can take up to age 65, some at 70. Right? For term policy,
Okay.
there is a maximum expiry limit also. Now, if you are taking something at age 60, the policy might not give you a 40-year term. It might say,
Hmm.
okay, maximum you can take is 20 years or 25 years. Again, that depends on
Hmm.
insurance company to insurance company, but uh, yeah, there is a maximum age limit on a term policy. So there is a maximum term or maximum age, whichever is earlier. But whole of life policy
Okay.
is duration of the lifetime.
So whole of life you can take at any age, and till whatever age you're alive,
So,
it is valid.
so maximum age at expiry is different, but age at entry is more or less the same. It depends on insurance company to insurance company. Some say that you can't take a new policy after say 65 years, or some say 69, or some say
Okay.
80 years. So there is a limit where you can enter into a policy or you can get into a contract.
Hmm.
But expiry age of the policy is different in term and in whole of life.
Okay. In whole of life, it's still
Yeah.
you are alive, right?
So if you get 60, you're covered till say 100 or 120 years, depending on the company. Term, maybe it'll expire at 80, 85.
Yeah. Okay. But then, like, are there people who actually take insurance policies at this late in life, or like, is that a smart thing to do? Essentially, like, should you not take it earlier?
See, whenever you think that you need a coverage, you should take it. The earlier the better, but then there is no particular time. Like you should think that some people think, okay, I'm in my 20s, do I need it? No, I don't need it. I'll leave it. But no, if you're in 20s, take the policy because you will get a better benefit and a longer term. Even at
Hmm.
65, if you can get a policy, definitely take one because again, now you don't have an earning. You're probably you have surplus of money which you want to have coverage for your family. It depends. I mean, but there is no particular age. I mean, anybody from 18 years on can take a policy. In fact,
But there
normal
is no,
policies.
there's like no best practice when it comes to age. Like you take
Uh,
it if it's
the
earlier, it's better, or if it's later, it's better.
formula, yeah, the earlier the better is a fact, but the simplest formula is now.
Mm.
If you do
Okay.
not have a term policy or any policy, any life coverage, take it now. I mean, there's nothing beyond that. Don't wait for tomorrow. You know, we don't know what happens tomorrow.
What happens tomorrow? True, true, very true.
If you didn't take it 10 years back, take it now.
Yeah, yeah, understood. Yeah. Yeah. So for all of the people who are actually listening, the earlier the better. So if you have not taken a term insurance policy, I think now is the right time to invest.
Definitely.
Speaking of investing in term life, so let's say somebody, does meet with an accident, or there's an unfortunate event. How is a life insurance policy paid out in that scenario?
Okay, and now for a term insurance, very simple. In case of death of the covered member, the sum assured is paid out to the beneficiary. Again, documentations are there, but that is how it is paid out. In whole of life, there are two scenarios. One,
Okay.
basically, you have, so depends again on company to company. You have a cash value and you have a death benefit, right?
Hmm.
So in some companies, a lump sum death benefit, which is your sum insured, is paid out, and along with that, the cash values are also paid out.
Okay.
In some companies, it is higher of either the cash value or the death benefit.
Oh,
Uh,
it's not both.
no, it depends, no, company to company. So
Oh,
most
okay.
companies have higher of either cash benefit or death benefit. So which means if you're paying a premium of whatever amount for X years and you've accumulated cash values and something happens to you, say you have accumulated 1 million dirhams and your death
Hmm.
benefit is 1 million dirhams, only 1 million is paid out. If it is 800,000 cash value and 1 million sum cover, 1 million is paid out. If you have accumulated
Okay.
cash value to 1.2 million, but your death benefit is 1 million, then 1.2 million is paid out because your cash value is higher than your death.
Okay. Okay. So
Depends.
this depends on company to company. Okay.
But most companies have inclusive benefit, which means uh, either of cash value or the sum insured, whichever is higher.
Okay. Um, all right. Yeah, so like the payout process, like the payout, what you get paid out is pretty straightforward. But what about the payout process? Like how long does it take for somebody to get a life insurance payout?
So
And how can they initiate the process, right? Like what all is required, what all documents will they be required to present?
since we're speaking about both life and term insurance policy, whole of life and term insurance policy, I'll first tell about whole of life policy. So now whole of life policy has two kind of payouts. One is basically a death benefit, and the second one is you want to surrender the policy. Right. If you surrender the policy, it's very simple. You basically have a surrender form that you have to submit to the insurance company along with your ID proofs, and whatever is the encashment value of that policy would be paid out to you.
So
Now,
this
second,
the surrendering can only happen when somebody's alive, right? Like they can only surrender the policy when
that's
they're
that's right. So if you
okay.
probably so that's one kind of payout that you can take. Second is basically the death benefit itself. Death benefit is paid out once the person dies. If there is a riders happen are paid out when the incident happens, the permanent total disability or critical illness when it is diagnosed, and
Okay.
when a doctor certifies that, right? How long does the payment? How long does the time period for payout? Again, it depends. A surrender is fairly easy. For a death benefit or a critical illness or a permanent total disability, you would definitely need supporting documents to be submitted. For permanent total disability, you may have uh, a clause which says, you have to be permanently totally disabled for a certain period, say 3 months or 6 months, for the claim to trigger. In critical illness,
Okay.
if it's, I mean, it depends again. Now, after it is determined that, okay, this claim is payable, it might take anything from 15 days to about 60 to 6 months, whatever time period is. Usually it's paid out within 15 to 30 days of the decision.
So, like once somebody raises a claim, within 30 to 60 days, they can
Uh,
basically get the
yes, so raising a claim means it's just not intimating the company that a person has died, it is also submitting the proof of
proof and the document.
so once the satisfactory evidences are with the insurance company and they accept the claim, probably about 15 to 30 days, the claims get paid out.
Okay. Okay. Oh, all right. And what if in a scenario where something is like death is always devastating, right? What if the family or let's say the spouse are not in a condition to make a claim or raise a claim immediately after? What happens in that scenario?
See, usually companies say you should raise a claim within, some say 90 days, some say within 2 years. Different companies have different policies. But I haven't seen a case where claims were declined because of late intimation. Late intimation means usually you know it within a year or two that, my husband or my wife had a policy. Uh, and to
Okay.
avoid this situation, I always tell people that once you take an insurance policy, please let your immediate family know, whether it's your spouse, your parents, or if you have grown up kids, tell them that you have taken a policy and share the documents with them as well. So it's easy to, claim. And I know it is difficult for people, to know what documents to be given while intimating a claim. It's very simple. You either have, if you're buying a policy through Policy Bazaar, please intimate us and we will coordinate with the company and the beneficiary to, what are documents or submit all the requirements. We will coordinate, we'll take care of that. If not, you can directly write to the insurance company along with your policy number and the insured person's details, saying that there is a unfortunate event that has happened and we would like to claim. Insurance company will send you all the list of documents or whatever they require for processing of the claim. So first thing is
Okay.
let your family know that there is a policy when you buy it, so everybody is aware and anything happens where they need to claim. Second, for the nominees or the beneficiaries, please intimate as soon as possible to the insurance company. They will send you a set of documents. Please don't wait for preparing all the documents and then intimating. First thing is just intimate and then let you know what they want.
Yeah, understood. When people are ideally when they're applying for or they've already applied for and once their policy is in effect, they should intimate at least the people who are nominated as a part of it, right?
Yes. At least somebody should be knowing that. I mean, no point I take a policy on myself and nobody knows about it. Right.
Yeah, exactly. Yeah, but it's I think it happens because people are just cautious of scaring their loved ones, or I think that's a lot of
It's how
the
they,
issues that I have observed. Yeah.
yes, I mean, but again, it's about caring for them, right? I mean, what is the point of not telling them and not getting any benefit for them rather than
True.
probably scaring them in the initial saying that, it's for your betterment that I've taken a policy. I'm concerned that, anything happens to me, what will happen to the family? That's simple reason as that's why I've taken it.
Yeah.
Yeah, I definitely understand from you're coming from. Yeah, in our culture, people get scared. Ajay, are you going to die? That is why I've taken. So,
Yeah, yeah.
but then you should know what is the bigger objective of taking a policy.
Joseph, one question I have about one of the riders that we talked about, which is permanent disability. That is not something that you can foresee, right? Permanent disability is not necessarily something that you can foresee. So, in case somebody has not taken the permanent disability rider or an add-on on their policy, and if something unfortunate like this happens, is there a way for them to get covered under their term insurance or like? term life insurance policy?
It's simple as telling, I don't have a mobile phone, but I want to make a call. I don't have a phone, but I want to
Oh.
make a call. Right? No, if you've not taken a rider, you're not covered. If you're not covered, I should say a rider. If you're not covered for that benefit and you want to claim for it, as simple as saying that you're not covered.
Okay, so ideally, permanent disability is something that people should take on as a rider, isn't it? Because again, like it's an unforeseen thing. You never know if something like this can happen, and if it does, it's better to be covered than to be not.
Whether it should be taken or it should not be taken is a personal choice. I would suggest yes, permanent total disability, critical illness riders are. I mean, it's a good two riders to take. They
Okay, and
sorry, they make the policy a little expensive, but of course, it is better to take one.
okay. And if people have taken these riders, and in case that they do face an unfortunate event where they're experiencing permanent total disability or a critical illness, what is the process like for claiming those benefits?
It is the same. Some have waiting period, some don't, which can be paid immediately. So intimation is the first thing, and then submission of documents. Basically, if it's a critical illness, you would require medical evidences, medical reports as a uh,
To
Frank.
be
Yeah, you would
presented.
require to be presented to the claims administrator to process that claim. So they will go through it and they will see if the conditions on the terms and conditions really cover this particular condition or not. If yes, uh, it's again paid out. If not, it's a decline.
Understood. Okay. Joseph, I think we have had a very insightful discussion. Why don't we take some questions from the audience? Because I think we've been getting quite a few. We have Pratima Singh who's asking, if I'm unmarried, should I still consider getting a term insurance policy?
Uh, I mean, nowhere in the world it says that only married people can take a policy. Anybody
Yeah.
is an earning member, and on whom or there are lives dependent on earning should take a term policy. Even if it is not nobody's dependent, still, if you're an earning member, you should take a policy. If you're young, you're unmarried, but you're earning, or you might get married again because you're young, you're not married. Uh, you can take a policy at a cheaper rate for a longer period. Start investing now on that, rather than waiting for another 10 years and getting a policy. So yeah, it can be
Yeah.
taken by anybody, no matter whether married or not married. Just that we will look at insurability of that person. Insurability, to be specific, is whether you can be covered or not. Right?
Okay. Okay. So, we have another, like, I hope, Pratima, that answers your question. We have another, like, connecting question from Tanvi Pathak, who's asking, how can I determine my premium amount? Is that something that people can do by themselves, or is that dependent on policies and the providers?
Right. So it depends from provider to provider. Every provider has a certain pricing element added to the pricing element that they use for determining a particular policy's premium. Now that premium depends on a couple of factors. One is basically your sum insured, which is the coverage that you want. Second, your age. What age are you taking it? How long you want the coverage to be? What is your gender? Smoker, non-smoker status, or basically health status, your occupation, and some things like that. So this determine your premium that you have to pay for that particular policy. So again, it's age dependent. The earlier, the cheaper. If you are not about, if you do not know which company to take for, you can ask for quotes from different company, or you can go into any website. Policy Bazaar actually has so many companies for which we aggregate the policy. So you can go compare prices and compare benefits by a policy. In this time of I mean, this is world is advanced. You can get all the premiums and all the conditions, terms and conditions from internet as well. But do speak to somebody before you take a policy.
Uh, Before we take another audience question, Joseph, I want to understand, like, this is connected to the premium bit itself, is the sum insured bit. Like, how can we calculate our sum insured for a term and a whole life insurance premium?
Uh, Simple way to calculate. So there are a couple of ways that you look at. So first basic and very easiest way is if you're between the age or below the age of say 35 years, 20 times your salary, annual salary would be an ideal coverage. As you grow
Okay.
old, probably over 45 years, you can take up to 50 times your annual salary. Uh, the reason we say 20 times or 15 times is basically okay. At 35, there's a family which is dependent to you, and in case anything happens to you for next 20 years, they should have enough so that your son or a daughter is going to college, getting married, or enough for that 20 years period, and they continue with the same lifestyle that currently living. There should not be any compromise. That's a simple way of doing it. Uh,
Okay.
second thing to look at is if you have any kind of mortgages or any loans, uh, add that to the sum covered. So if you want to take a coverage of say 1 million and you have a loan of 1 million, so I would say take 2 million instead of a 1 million. That's a very
Okay.
layman way
Okay.
of calculating it. But in
Okay.
case you want further details, do reach out to our advisors. They will be really helpful and tell you exactly what amount is ideal for
Definitely. So we'll just take two more guest questions, Joseph. One is from Rohit Sharma. He's asking, is term insurance claim successful in case of accidental death?
If you yes, I mean, of course. So it has two benefits. If you've taken an accidental death benefit, it has a double indemnity. If you have not taken an accidental death benefit, in case of death, it is accidental death. It is pretty much same straightforward. See, coverage is death any cost, which means sickness or accident. It is just not
Okay.
like sickness or like accident. Basically, it's not two different things. It is any cause, right? Just to be careful, it should not be suicide or an
Yeah.
accident, which
Hmm.
is not permitted under the per se of law.
Okay. And the final question, Rohit, I hope that answers your question. The final is from Nupur Jain. She's asking, can we cash out our whole life insurance policy?
Oh, definitely. That's what I said. So, in case you want to surrender your policy before expiry of the term, so basically, if you've taken a 100-year policy till 100 years, and at age 80 or at 70, you decide, there is enough cash value and I need cash, you can definitely put in a surrender request and cash out that money. There might be some kind of surrender penalties that you might have to pay, a little bit of charges against surrender charges, but yes, definitely you can cash out the policy receipts. Not the sum insured, but the cash value,
Wonderful.
to be very specific.
Okay. Okay. Got it. Yeah. Nupur, I hope that answers your question. We have another question from Abhimanyu. He was asking whether it's wise to get a term insurance policy after 35, but we've already covered that during the discussion. So I think with that, we will wrap up. This was extremely insightful, Joseph. Thank you for taking out the time and joining us. And sorry about any of the internet glitches. We will see you in the next session to discuss more on the topic of insurance. And thank you everyone for joining. Thank you for sending in
Thank
your
you.
questions.
Thank you. And to
Have
drop in
a
messages from the YouTube so we can take it up and answer you.
absolutely. All right. Thank you guys for joining. We'll take your leave. Bye bye.
Bye-bye.